Good afternoon. Looks like a couple of you are going to have to go home and change if you're planning to come to the gala. So let's get this show on the road. The way this works, each presenter has 3 minutes. After the 3 minutes, there's a 7-minute Q&A from each of the judges. They'll each have an opportunity to ask one question at a time, not 3 in 1, please. And once we are all finished, all 4 contestants, they will tell us where they want to invest their money and why. So let me introduce, first of all, the judges. On our far left, my far left, your far right, Rick Rule, CEO of Rule Investment Media. We have Cailey Barker, Managing Director of Xcelsior Capital. Erez, Ichilov, he's a critical minerals expert. We have Mark Burridge, CEO of Baker Seal Capital. And lastly, we have David Street, co-founder and CEO of Tembo Capital. All right, our first contestant today, Danny Senek of Abcourt.
All right. Hi, everybody. I'm Danny Senek of ProMarket Network. We're a group of investments just like you. And today I'm going to tell you why we are investing in Abcourt and why you should have a look at it too. So basically, Abcourt, on their board of directors, they got people that know how to do it. They did it in the past. They got more than 35 years of operator experience, finding, developing, and operating different projects. They own 27% of the company, and altogether with our group and some contractor of the company, that's above 57% of the company that is in close, tightly held hands. So what are you getting for 100 million market cap company? You get a company that has already a mill, tailing, a sleep camp. We're already producing, so everything is already on site, ready to go. You're also getting 12 gold projects, 2 silver and zinc projects, and 1 copper project, all within the northern Quebec, mining-friendly jurisdiction where water, power, and people are easy to find. That's one of the best jurisdictions also for the ESG in the world. The mill is already turning as we speak, and we recently secured a toll mining agreement, toll mining permit, which will allow us to have toll mining agreement all around the other property around us, and which will allow us to have a hub and spoke strategy with our own property and other property around us. The company is currently on a path to make 30,000 ounces of gold per year with an all-in sustainable cost of $1,600. That will make between $100 and $120 million per year in positive cash flow. So when we know that a company is usually sold a percentage or a multiple of the positive cash flow, a 100 million market cap company making $120 million per year, that's quite rare. So that's where we are heading. And what are they going to do with that kind of money? First, we will buy back some of our shares. Then we want to expand the mine life of our main project, Sleeping Giant. All of the red dots behind me are 25-gram ton intercept that are not in their current resource. So that's how we plan on creating many more years to come in our current project. And then we will spend some of our money in developing our exploration project. We recently found the Flordin project. We did a 300-meter trenching program on that property, and right at surface we found 5-gram ton for 15 to 20 meter width, 300 meter wide. We then expanded that through drilling. Now the trend is 2 kilometer long by 600 meter lateral by 300 meter depth, and that has a potential for multi-million ounces deposit. So now I'm already invested, but it's your time to make your own decision about whether you want to be in a producer that has the potential to grow to $1 billion company, many property, many upside potential, and that is already producing. Thank you.
Excellent. Rick, why don't we start with you? We'll get this question going.
So many questions. Seldom in a company this size can you afford, in terms of overhead, experience in exploration, development, construction, and operation. Can you handle that objection? Do you have expertise in everything that you're attempting to get done?
Actually, Rick, we do. We do have that kind of expertise. As I say, on our board, we have people that have been having a lot of successes in past producing asset, whether it be in Quebec or all through the world. So we have that kind of expertise. We're currently burning about $3.5 to $4 million to have all this operation running. And with the current production plans, we will be making about $10 million of free cash flow at the end of the month.
Sorry, let's just stay with the one question, please. Thank you. Maybe, Cailey, you want to go with that second question that Rick was going to ask.
30,000 ounces a year, where do you want to grow it to?
Well, the plan is to start with the 30,000 ounces because we currently have 7-year mine life. We were in brownfield, so we didn't want it to burn money to do more drilling than 7 years to start with. That's why we are planning to do some exploration. Then we want to bring it to 50 next step would be 50 and 70, and that's when we will bring in other property that we are having to supplement and make more ounces from the operations.
Erez.
Rick took my question, so I'll just, since you are in Quebec and we're talking about exploration, etc., in northern Quebec, tell us a little bit about your relationship with the relevant indigenous communities, with the what's the logistical situation, etc., and how are you seeing yourself working all the way from exploration to the brownfield, sort of restarting of the existing facility in terms of engagement with the ecosystem around you?
I love that question, actually. We are not at the 49 parallel, so everything has already been taken care of with what they call la paix des braves in Quebec. The government has already negotiated with the First Nation, so everything is clear. There's no problem. Everything has been negotiated. On top of it, on our board, up until about 3 months ago, we had the First Nation, a member of the First Nation that's surrounding our property that was on our board. She resigned to let Chad William join in because she believed that's the best move for our company, but the First Nation are very, very supportive. And if that was not enough, the wife of our current CEO has worked as the and First Nation liaison for years. So we know all of them, and it's really, really not a problem in our case. We work there, we live, most people are living there, and we're taking care of our own.
Mark.
Great. Yeah, my question for you is that you mentioned that once you start making money, you'll buy back shares. But given the exploration potential, 2 kilometers by 600 meters, why would you buy back shares rather than try and find the mother lode that takes you from 50, 70,000 ounces to 100, 200,000 ounces a year?
Well, 2 reasons why first one, we're stuck on the TSX, and we all know the shorter problem on the TSX. We're currently a $100 million market cap company that, to my knowledge, that's about 1/10 of what it should be worth soon. So we want to be able to stop those people trying to play with our stock, and with a wealth of money, we'll be able to actually stop them. Then we want to reward the long-standing shareholder that have been with us for many, many years. The stock have not moved because we kept issuing share in order to finance the project. So our goal is to bring the market price and the market cap to a reasonable level, and then spend more money. We don't believe we would have to spend that much money from our operation to actually buy back and bring it to a reasonable level.
David.
Yeah, just in terms of the financing of the sort of ramp up of small scale production, how much debt do you have? How much cash? When do you sort of go cash break even with the ramp up of production?
We currently have $12 million US of debt with Nebari. We have $14 million in the bank account. To break even, we need about 700 ounces. Last month, we released 475 ounces of production, meaning that the break-even point is just around the corner. At today's gold price, it's a no-brainer. We will be cash flow positive, most likely early Q1 2026.
Let's open it up. We have a couple of minutes. Rick, you had a second question?
Sure, thank you. In my experience, microcap companies are often best judged by understanding what the next major unanswered question is. What is it that the management team is focused on that can add value? How do they add transparency to the street around the value of the answer to their questions? What's the thing that concerns the board most right now? What is it that you're doing, the single most important thing that you're doing to answer unanswered questions around the value of your company and your project?
So how do I plan on making that stock move, right? If I summarize is how do I plan to make that stock move back up? Well, first, there's the buyback. I strongly believe that the buyback will help us to create some value. Then the Florida deposit has a real potential for multi-million ounces. I've walked the property, it's right on surface, and it's an oxidized pyrite where you can basically walk on that oxidized pyrite. So 100% of the hole we made in that project, and we know how to find them, where to find them. There's a major potential for open pit there. So if I was to bet on what would be the major catalyst and what can bring the 6 to 10,000 ton project per day, that will be the Florida project.
So the answer is the exploration upside at that particular location. Is that?
Yeah.
Okay, thank you.
One last quick question. We've got a minute left.
What's the recovery of the plant?
Sorry?
What's the recovery of the plant?
The recovery?
Of the
97%.
Any last questions? We're good.
Well,
all right.
Thank you very much.
Next up, we have Nolan Peterson of Atlas Salt.
Hello, judges. Hi, I'm going to go through this pretty quickly. So we're developing the Great Atlantic Salt Project. It's on the west coast of Newfoundland. It'll be North America's first new salt mine in nearly 3 decades. This is sodium chloride. Salt's pretty typical. It's used for road de-icing in our application. There are other uses as well, but the primary markets are the Northeast US, Eastern Canada. It's a road safety issue, infrastructure as well. This is not the pitch deck. Anyway, let me jump through here. So what is the problem we're trying to solve? In North America, we don't make enough salt currently to satisfy our needs. So we import about 8 to 10 million tons per year. Our mine at full ramp up will produce 4 million tons, and the total market here, sorry guys, this is not the pitch deck, is 30 to 36 million tons for de-icing salt. Well, the reason we import a lot of salt is because existing mines in North America, again, the last one was built 30 plus years ago, they're not capable of keeping up with demand. Their costs are high, they have environmental concerns and liabilities, and we supplement with foreign imports, which are cheaper to produce, but more costly to ship. So we come in and we can place salt from our port. Sorry, everyone. We have a port facility 3 kilometers away from our site, which answers the key infrastructure question for moving a bulk commodity that will allow us to move product into the major markets that we would target. This allows us to be a low-cost producer and a low-cost shipper and be competitive with foreign and imported and domestic salt production. Now, the reason that we are cheaper than all competitors is because we have a shallow deposit. That's what makes this salt mine viable compared to any potential alternative deposits, which there aren't any. We're the only publicly traded development salt story out there because we have the elements that we need, which are the shallow deposit and the infrastructure. Now beyond that, we have a feasibility study completed. We put it up, 2 of them actually, we did an updated one a month ago, and we have an environmental assessment released by the Newfoundland government last year. It took 2 months to receive that. We have full community and Indigenous support for the project to advance. We have raised money in the last month and a half of $9 million Canadian to advance the project and develop it. And we are starting early works construction. We're working with a financing partner, Endeavour Financial, to raise the remaining capital. And what we are chasing here is $325 million of EBITDA per year for 25 years, each year flat, or not flat, but very stable production, and $188 million of free cash flow. I really wish I had the pitch deck, but...
You don't need the pitch deck. You got your information down.
Thank you.
It's all good.
Yeah.
David, why don't we start with you?
Yeah, good presentation with the wrong deck. Could you talk a bit about how you plan to sort of penetrate the market for salt? Presumably the customers are buying salt from somewhere else now. How do you sort of establish the market and what's the contracting framework for salt?
Yeah, so most contracts in the salt space are to cities and governments. They put out a tender each year. Many of them go through departments of transportation in the US, or sometimes individual cities make bulk purchases. Then suppliers or off-takers who are intermediaries to suppliers bid on those contracts. Our primary preference right now is to engage with an off-taker who operates in the salt space and then have them be our intermediary and distributor. We have an MOU right now with Scottwood Industries is one potential offtake partner. This target tonnage here was under the original feasibility study number was about 60%. They've signaled they would like to increase that tonnage to be closer to what we are intending to produce now in the updated study, which is 4 million tons per year. They are the largest distributor of packaged retail de-icing salt, as an example. They have contracts with Walmart and Home Depot, so that gives also an avenue to higher margin salt distribution, the stuff that we would sprinkle on our driveways and sidewalks as retail customers. And then there are other partners out there that are potential horizontal integration or vertical integration, downstream and upstream.
Mark.
Yeah, thanks for that. I think I read right, 589 million of
Correct.
production capex. How do you intend to meet that between debt, maybe off-take finance, equity? You know, what's the plan for raising that
Yeah.
capital?
So right now the key piece of that is a 60% senior secured lending that Endeavor Financial has been tasked with bringing in. We also have received early interest for another 10 to 20% from possibly subordinate debt. And I want to be clear, the reason that those types of debt levels and quality is available to this project is because it's salt, right? It's a commodity that has a long history, very little volatility. We're not chasing price target windows. You're selling to citizens and government. So that gives the lenders the stability to invest in it as they would an airport or a hospital or a subway or something like that. And then we have the option of pre-sales of salt as we get closer to production from potentially government sources, and also always available government sources in Canada. Grants, nation building type of talk that's going on out there right now. We are a project that's ready to go, ready and willing from all partners. It's a no-brainer for me to get that kind of support when a lot of other projects out there are still challenged.
Erez.
Yeah. How close are you to an FID in terms of putting the pieces of the puzzle together?
Yeah. So we just finished the updated feasibility study along with a significant amount of third-party due diligence that will go into the lender package. We'll be going to market for that in early Q1, and we'll advance discussion with lenders and hope to understand by the summer what that lending package looks like. And then with that in hand, we can go to the equity markets and we'll bring them a financing de-risked project. And then we'll, at that point, assess our ability to advance full steam ahead or what our capabilities are.
Cailey.
Yeah, maybe a sort of question more on quality or price. Or, how are you going to displace the incumbents to gain market share?
Yeah, so we will be the lowest cost producer when you factor in shipping and production costs across the board. We are the lowest quintile of mine gate production costs because the biggest cost drivers are West Coast Newfoundland labor and Newfoundland hydropower, which are not very expensive in the grand scheme of things. We have no diesel, we have no cyanide, we have no sulfuric acid, we have no external global commodities that are subject to price shocks or anything like that. So we can come in at a low cost, and then when it comes to shipping, our foreign competitors take, say, 3 weeks to get a boat from Egypt to Boston. It takes us 3 days. So we have a price advantage there. In all cases, we are the lowest cost producer. When you have that advantage, you have great flexibility to be competitive to the extent, I don't want to give away our strategy at this point, but you could potentially put a lot of pressure on existing mines in North America that are operating at the high end of the cost curve that would really make them think, limited in their ability to compete with us. But we have a lot of flexibility. And in terms of quality, if you know the salt space, we're 96% grading salt. Salt deposits of this nature are, they have to be 95% plus to be used as de-icing salt, so quality is less of an extent. And I want to be clear too, we've chosen de-icing salt as the most conservative, bulkiest market. There is the potential to use salt in other applications with higher purity requirements. We have some of that in our deposit as well.
Rick?
I saw your after-tax PV8 number, but I didn't see a CapEx number. And in addition to the CapEx number, the sustaining capital and G&A number necessary to get you to mine start.
Yeah, there's the pre-production CapEx number there. Sorry, it's on a different slide, Rick. 589, the NPV was about 923, NPV 8. And what was the other? Sustaining is 609.
It takes you to get from here to there. In other words...
in terms of the total project cost plus G&A, probably another 20, 30 million of G&A costs on top of that, yeah.
We have 40 seconds there for our last question, Erez.
Given the location, I assume most of it would be exported. Could you
Correct.
talk a little bit? Are there any tariffs in the sending it to America? And if you're going to Europe, how does Scope 3 emissions and CBAM come in?
Oh, sorry, I missed that. Yeah, because we are tied into the grid, this site is 100% battery electric. It will have 0 greenhouse gas emissions at source, at the mine site, which is quite a feat, really. Tariffs into the United States, currently not an issue, but who knows with the current administration. We would be targeting to be in production in 2030. Who knows then?
Thank you.
Sorry. What's the market cap, do you know?
Thank you, Nolan. Rain of Egg, Blue Lagoon is next.
That's the best mechanism to cut somebody off. I like that a lot. Where's the, here we go. My time's already going. I gotta go fast here. All right, we're in British Columbia. We're a high-grade gold project in British Columbia underground. In 10 years, only 9 permits have ever been issued in British Columbia. It's a very tough jurisdiction, speaks to our ability. We started production 2 weeks ago. So our story is 3 parts. Cash flow starts this month, clear path to 1 million plus ounces, self-funded. I'm gonna show you how we're gonna do that. District scale exploration opportunity. Right to the mine site, we can drive less than an hour away. There's the portal, 1,600 meters of underground development already done, $30 million that I've raised, and $60 million before that. That's what it kind of looks on the inside currently. I won't talk about all these people here, but we've got a pretty stellar team. Some of the people that you might know who are helping me build this thing. Everybody, I'm sure, knows Quinton. This guy was one of the hardest guys. He's kind of like Rick. He's one of the hardest guys to get a hold of and get our meeting in front of. It took me 9 months. After a 90-minute technical call, he said, "You boys have a hidden gem here." So we have we toll mill the product, the ore. I sent 5,000 tons to have it processed to check everything. We got they confirmed 9 grams a ton of a grade, 95% recovery on the gold, 90% on the silver. We have a nice starter resource of 218,000 ounces. That was a strategy because otherwise I'd have 1 billion shares by now. I didn't want to raise any more money. That gave me enough to go to the government and get a permit. This is the most important slide to me. You know, this year we'll start with 15,000 ounces. At today's gold prices, we're going to do almost $35 million in free cash flow. I mean, it's insane. Next year we'll move to 20,000 ounces and we'll do almost $45 million in free cash flow. The path to 1 million ounces is easy. We've done 50,000 meters of drilling in and around the main portal there. That's the drilling you see on the left side. You can see it's all mineralized. That's the lowest hanging fruit. I can just go in there, do about 30,000 meters of drilling, and we'll get to triple the resource. We went 150 meters below the current resource. Got 3 meters of over 18 grams a ton, and of course there's lots more that we have for show. This is Newmont. I threw that in there for fun. They met with me in Beaver Creek. They requested the meeting. I asked why after the technical meeting. Why would you meet with us? We're so tiny. They said we're the biggest players in the area. We know these alkali gold systems better than anybody else. You guys have an 18-kilometer strike length that you haven't even tested, and you've only drilled 230 meters. So that tells you the exploration story. We have lots of different areas that we've identified that we're going to self-fund to get there. And lastly, in British Columbia, you cannot do anything without the support of the First Nations. You had to get that. So rather than me telling them, what is it, I'm going to give you jobs and everything else, I asked them, what is it that you want? They said, Yinta. I said, what's Yinta? They said, be one with the land. So I took the time to understand that philosophy, but how do I teach that to my staff? Had a local artist do up murals, had them framed, and rather than putting them in the boardroom, we put them on the mine site. Every building has a different image on it. That went a long ways. 18 of them came to the mine site, and...
All right, Erez. Wow. It looks like he's got a lot of presentation left in him. Ask some questions.
No, there's not a lot of presentation left. That was it.
Oh,
They blessed the mine. No one's seen that kind of support in a long, long time.
Yeah.
And they wrote to the PDAC to give us to nominate us for the Sustainability Award. We never, no small company's ever going to win. But guess what? PDAC told us last week we won.
You're killing your question time. Erez.
That's by design.
Again, I guess going back to a theme that Rick started earlier, in the balance between an in production with a very substantial blue sky of exploration, or the other way around, a very promising exploration project that can also demonstrate it does have near-term cash flows. If you do soul searching, what's the DNA of this entity?
Well, look, there's no guesswork here now. I've spent 5 years. I thought I'd get this permit in a year. It took me 4.5 years, and the people are congratulating me. I mean, it's ridiculous how long it takes in this industry to get this. The cash flow is imminent. We started shipping 2 weeks ago, and we'll have cash flow this coming month, and by February we'll be free cash flow. We have no debt. Been very careful. The DNA of the company is simple. Look, I studied the business. I'm not a geologist. I'm not an engineer. I'm an entrepreneur. I put the right people around me. I want to be the dumbest guy in the room. I studied the business. In 1957, Agnico Eagle started with one mine. Before Peter Monk died, I met with him. He started, Rana, you start with one mine. That's what we're doing. We're starting with one mine at these gold prices. It's pretty hard to screw up, right? Because you're going to get the cash. I didn't say it's impossible to screw up. It's pretty hard to screw up, right? So if you have the right people around you, so what do you do with that cash? Well, there's a tremendous amount of exploration potential here. So why keep going with your hat around, and why not take that cash flow that's imminent and take it and expand the exploration potential, which obviously is there. Otherwise, why is someone like Newmont meeting with us, right?
History and mystery.
That's my
Cailey.
Mm-hmm.
Yeah, I mean, give us an outline of what's coming up on the exploration for next year in terms of, budget, program. What would you be disappointed if you didn't prove up?
Well, we've got data of 50,000 meters that we've drilled, and plus 100,000 meters from previously. So what we're going to do is take some of that cash flow and do the lowest hanging fruit first, which is to do the infill, right? That's easy for us to do, and very low, very cost effective. And then we've already have a 5-year permit to explore, and for the last year and a half or almost 2 years, we've been planning all the holes. So we know exactly where to go, exactly where to drill, and I would be disappointed if we didn't hit the numbers that we've already been hitting, because we've already hit them. We know exactly where it is, and by undercutting and stuff, I mean, we're very, very confident that we're going to. So where the disappointment will be, we had a new discovery 2 years ago before we ran out of money, multiple double-digit hits there. It would be disappointing if when we followed up, we didn't hit those same ones there. But we're pretty confident we're going to.
Mark.
Maybe you obviously, it's really an exploration company, but you're making good cash flow to pay for the exploration.
That's right.
Tell me about, you said you surround yourself with a team who've been there, done it. Maybe tell us a little bit more about the team, their expertise, some of the successes they've had.
Sure. Our chief geologist, project manager is Bill Cronk. He worked for John Robbins from Discovery Group, one of the best guys in the country. He came from them. I caught him in between the two projects before when they sold their last one, and I showed him the dream. I showed him, every geologist wants to put a mine into production. I looked at over 200 projects to find this one, and because I'm a business person, and by the way, I have over $2 million of my own money in this company. I founded it, and so when I showed him that this is going to get permitted, he got very excited, and I brought him in for that. Super guy. The mine contractor, his father is a legend in the town. Was a legend in the town. This guy was like 10 years old, running around in the same mine. Very, very important to have people like that around me, because this guy knows every nook and cranny of that mine. When we opened the mine, everybody told me, you're going to get a politician, you're going to do it yourself. Who's going to open the mine? You know who I chose? Him. Why? Because now he has ownership of that mine. So, we have, that's just two examples of people who have high expertise. And then you saw, I think, Butch's, many of you will know him, very well-respected mining engineer. Steve Cutler from Roughstock Mining, who's currently doing the Stillwater mine. They specialize in narrow vein mining. So we have a lot of depth in our team.
PV8 versus PV8 for M&I versus market cap.
We're sub $100 million. We're about $100 million market cap. We're about $100 million market cap right now, and I mean, just I hesitate to. I mean, we're going to be trading what 2.5 times cash flow.
So you don't have a PV8 number available to you?
Yeah, we will have that. I'm hesitant to say it because there's so many rules and regulations around what I can say.
Got it.
David.
Who are the main shareholders of the company?
Myself, I'm in my family are 12% of the company, and then after that is Crescat, almost 9%, 6% from Phoenix Gold Farm out of Kuala Lumpur. Our mill was so impressed with our project, they came in and took 6% equity, plus gave me a $2 million unsecured line of credit.
So maybe explain the deal for the mill. Did you buy that? I'm trying to understand.
Well, I'm gonna start the milling, the permitting process for ourselves as well. But I didn't want to miss the gold market by sitting around and waiting for that. So because we have this exceptional relationship with the First Nations, because we understand how to get things permitted now, we will start that process. But in the meantime, it just makes sense to use a mill. And Nikolai is a very unique mill. They only have a permitted for 250 tons a day. So really, we're their only customers. They have Talisker, but that's going to end next month. So the mill is geared really for us, and while they wait, because they're also an exploration company. So while they wait for theirs, so we have a 10-year agreement with them, but I'll have our own mill permitted well before that.
Okay. And how far away is that? Is that nearby?
Nikolai is actually not that close. It's about 8 hours away. But the only reason it works is because it's 9 grams a ton. So it costs me about 3/4 of a gram. And I'm Indian by birth, and in the province of British Columbia, Indian people have the largest trucking companies. So a lot of people in this industry told me that's a long ways to go. So I went to my buddies and said, "Hey man, these guys are telling me that. What's the deal here?" They said, "Are you kidding me?" I'm like, show us, and we'll show you how it works. That's why I stand out 5,000 tons. We didn't even have a flat tire. I mean, those 3.5 months. That was the test to make sure everything worked properly.
Thank you, Ray.
Thank you.
All right, our last contestant today, Liam Farrell, American Tungsten. Welcome.
Hi there, everyone. So American Tungsten, our focus, our objective is bringing the historical I'm a mine asset in Idaho. It's an established historical underground tungsten mine back in production by the end of 26, and then more importantly, becoming the first tungsten asset to come back online domestically in the US since 2015. Why? Some people don't understand some of the macroeconomic backdrop here, but the reality is infinite supply, highly controlled by China, and as the macroeconomic political environment's played over the last year, tungsten prices have tripled in the last year to date. Our asset, previously the 4th largest past-producing tungsten mine in the U.S. in the early 1900s to about the 1950s. Over $400 million U.S. has been spent on infrastructure development on the asset in today's dollars. Vast underground network system of adits, production ore passes. More importantly, this infrastructure is all above the water table. We're able to leverage historical drilling, extensive drill footage with average grades consisting of 0.63 grade tungsten, which is the second highest in North America, 0.15% moly and 2 ounces per ton silver. And we're also able to leverage an historical resource base of 350,000 tons that's also comes with 6 million tons almost of moly. Additional benefits on the property, patented private mining claims in a very friendly Idaho jurisdiction, Tier 1 infrastructure, paved roads, low-cost power on site, access to water, access to a skilled labor force. What makes us special? The word I would use is flexibility. We're able to take a problem differently than most, and that's because of our high grades. We're able to take a small scale in nature production environment. We're able to think about this differently, modular, low capex environment, but more importantly, we can do this profitably and scale to our anticipated needs over time. More importantly, as of today, we're in a fully funded position to do that. What have we done in order to get there? We've already rehabbed most of our infrastructure as it relates to supporting our extended drill program. That'll take us basically from 350,000 tons to an estimated 1.7 million of measured and indicated by the end of Q2. Production workflows and equipment are being supported by WSP currently on a modest 500 ton per day production. CapEx for us would be 25 to 30 million approximately, and again, modular in nature that we can increase to meet our needs over time. Fully funded, 22 million in the Treasury, recently received LOI from Xcelsior, visibility and other government funding at the state and federal level. Key objectives of the timelines, our phased program or drilling program will take us basically into Q1 next year. We'll update that resource study that will provide more of an economic feasibility plan and an economic mine plan moving forward. First product sale by the end of next year, with commissioning beginning of end of next year with production plan for Q1, Q2 of 2027. Key deliverables, just put some economics here. 1.7 on that measured and indicated. If we were to take that 500 ton production level, supports about a 7-8 year life of mine. If we were to cut that tungsten price in half and not even include the credit for the moly and silver, it's about 150 bucks a ton. We still generated NPV internally that exceeds 500 million US, and again on a very basic capex number of 25 to 30 million US. So that payback is extremely quick. But more importantly, we do something meaningful. We support that American demand of 8%.
All right, Mark, why don't you kick us off on the questions here?
Yeah, sure. Maybe just to dig a bit deeper in those financial numbers you said. So CapEx, how many tons of tungsten are you going to produce? How much revenue? What's your margin? Just take us through some of those numbers just to help understand.
Yeah.
And then you started off at, sorry,
go ahead.
And then how that scales up over time in terms of modular approach.
Let's just keep it to one so that we have an opportunity for this.
Yeah, again, because of our high grade, it gives us flexibility. And it's flexibility not only just on our tungsten, but our moly acid as well. So as it relates to our production schedule moving forward, what we're looking at is something that's modular in nature where we can start small, generate cash flow positivity relatively quickly. Even at 2,000 tons a month, we would be able to generate about 20 million in net revenue and still be able to have a payback period on a capex plant of less than a year. So even on a bigger environment, it just gets better. We've been extremely conservative with the tungsten pricing, especially with the credits that we get with the moly and silver. But the reality is, this is very small scale in nature. This is modular in nature. It's like a batch system that we can increase over time. It doesn't require a lot of space or capacity, and we can add to that production run rate as we go.
Rick.
So many questions. Where do I start? Again, have you done a PV8 in terms of measured and indicated? And how does that juxtapose with your current market capitalization?
Yeah, we have an historical PA of an established 350,000 historical. We need to do an updated PA, which is what we're doing now. That's what our drill program is currently supporting. So we're doing about 12 to 15,000 feet of drilling. We have 5 vein systems that protrude out from a moly porphyry. So what we've prioritized on low-hanging fruit based on confidence is basically rehabbing the adits that get us access to those veins easily, so that we can bring up that resource fairly quickly and bring it 43-101 compliant.
Do you have an answer for the PV8 currently?
No, not 43-101 compliant.
David.
Could you talk a bit about the permitting sort of schedule?
Yeah, we're fortunate. Being on private patented land, the permitting is actually relatively minimal. We have consultants that are assisting us alongside WSP, specifically as it relates to water rights and everything else related to the production side. But as it relates to reclamation and when we get into the water, it's relatively minimal just because we're on private patented land. We have access to our own water rights. So the permitting requirements is if we're on federal land, it would be a different story.
Cailey.
What's the quality of the concentrate you're producing and where will it be placed?
Yeah, so we're thinking about processing the mill on site. So we have 600 acres. We have ample acreage to put the processing mill. We intend to do 2 concentrates, one for the moly and silver, one for the tungsten. We're targeting in excess of 70%. And we think we might be able to prove that on site with beneficiation via X-ray ore sorter, for example. But that's what we're targeting currently.
Erez.
Given the location, both in terms of the country and the state, could you tell us a little bit about how these critical mineral projects are getting support these days and what benefits are you enjoying?
Yeah, it's funny, timing's everything. We're extremely thematic. I'm actually in the governor's office next week with the state of Idaho. We've become very thematic with the communities as well. What's interesting is that the miners that are currently working on the project, their grandfathers were actually past producers on the actual asset themselves. So it's been a good feel-good stakeholder story. But the reality is that we seem very thematic. The reason my CEO is not up here right now is because he's marketing with a big bank because of that being thematic in that nature. So it's interesting for us because we're a 50 million roughly US market cap company. But I think it's the uniqueness of our economics, the flexibility of our business model is why people are looking at us differently. And in reality, there's not many assets out there that can be brought on production quickly without substantial capex or some kind of time horizon that's associated with it.
Let's open it up. What other questions do you guys have? Rick, you're good? Cailey?
Yeah. Just a little bit on the offtake.
Yeah, the offtake, we've signed some non-binding agreements, one more recently with GPT. The offtake, we're going through our MET program, which should commence now, to be honest, with WSP, which will end of Q1. We've already identified some interesting offtake partners, which includes global names you will know. We're taking it a step at a time. What we don't want to do is cut ourselves at the knees. We want to give us some flexibility and some optionality. But at the same time, the plan is to get one or two partners involved on the offtake side that would create visibility to revenue, stability as it relates to our business model. And again, it's interesting because we have that flexibility in our asset. It's not just the tungsten. We've actually been approached on the moly as well.
Okay, you might have said it, but if you haven't, take us through the timeline. 43-101, permitting, construction, those things.
Sorry, it's not clicking very quickly. So I filled in last minute, so I apologize. So I'm walking through this. But that's kind of a high-level timeline. So where we've come, where we are today, we have an updated historical resource of June of this year. In the last 4 months, we've raised about 25 million of capital. We received a letter from Exim on top of that. Moving forward, the goal is by the end of Q1 to basically have by the end of Q2 to have an updated resource updated resource study in place that supports an economical mine plan. We're going to get into a feasibility analysis going into the end of Q2 into Q3. We really want to be commissioning by Q4. I've been held a gun to my head that I need to sell product by the end of 2026, and so that's the thing I have to deliver to my CEO.
Right, we got 50 seconds for a last question. David, you got something?
Just when you're talking about various tiers of support, you have Exim, so I guess the DC question is, does it come both from a pros and cons perspective, the DC support, does it also require you to commit to a certain domestic portion of your offtake to provide certain perhaps suppliers that supply the DOW and so on? How does that work from that perspective?
Yeah, it depends on the party. So Exim, we have to, I think it's 10% minimum we have to export out, which is not that bad of a consideration. Flip side, right? It's a bit of oxymoron, but in Exim, we're not asking for $500 million, so our laundry list of qualifiers is relatively small. As it relates to the other programs, thank you.
Thank you very much.
Thank you.
All right, we're going to give the judges 3 minutes to deliberate here and just maybe take a look at their notes, except for Rick that doesn't need to take notes. Some people have photographic memories. His work's a little different. And then we'll come back and we'll announce a winner. I'll ask each of them to give me an idea of where they allocate their money and why. That gives me a couple of minutes to thank Beacon Events and Minds and Money Resourcing Tomorrow, Andrew Thake, for all the incredible work that they've done to put this show on. Every year it's getting better. And the participation here this year has been absolutely electric, and it's been a rough slog, since the end of COVID when we were able to open doors again and get people in here. It's gone from being a bowling alley to it's almost like a rave in this place now. It's really amazing to see the energy and to see how many meetings are being booked and how much business is being done, and that it has a lot to do with Andrew Thake's very hard work. Thank you. The judges are staring at me. It looks like they're all ready to go here. So Rick, what do you think?
All four presentations were compelling, and my suspicion is that all four will probably do well in the market. If I was to allocate $1 million of my own dollars, I'm afraid I wouldn't give up any to any of them, despite the quality of the presentation. In bulk commodities like salt, I prefer those to be private as opposed to public. I found that the public markets are ungenerous with intelligent business plans, and being private obviates the need to subject yourself to the idiocy of public markets. With regards to the other three, the idea of bootstrapping is always sexy to entrepreneurs, and it was sexy to me when I was a young man. What I've learned in my old age is that anything that can go wrong with a big mine can go wrong with a small mine, but a small mine can never make you big money. So the truth is, if I was supposed to allocate $1 million of my own dollars, I'd keep my hands in my pocket this round.
Thank you. Thank you. Cailey.
Thank you very much. Yeah, I agree with Rick. Compelling presentations. It's always hard. I mean, as Hemingway said, if you had more time, you'd write a shorter letter. I think for me, I would sort of disagree with my learned colleague that actually I would go with the best business case, and for me the best business case, I'm sorry, I forgot the name of the company, which is embarrassing, but the salt for me.
Atlas Salt.
Atlas Salt.
Thank you.
And the reasons for that.
Well, I look at it like a business case, rather. So I'm not playing the stock. I'm playing what's going to make me more tangible money on the metrics that I can see in front of me. And for that, it came across as very, very, very compelling. So it might not have the upside and the sexiness of a gold stock, for example, but the metrics will speak for themselves for me.
Thank you. Erez.
Yes, well, first of all, thank you all for contestants for presenting your case very clearly and very well, and it's definitely a case of apples and oranges. I think that pushed to a corner and actually casting a vote, I would go with American Tungsten, and the reasons are that having a dual use product. That's both part of, fix the theme of mineral security as part of national security, but also, obviously, you need tungsten for brain surgery, not just for weapons. So I do like dual use type of end products, which I think with the sort of the need to reindustrialize onshore, build sort of non-Chinese or Western supply chains. You get almost like a free ride to your civilian applications by the support you get from the governments and institutions that need to secure the component, which is in essence a public good, where the elasticity of demand is zero and you actually need it. So I think it's a good moment in time, especially in the United States, especially in well-established mining states within the United States. I like the idea that it's a brownfield. So the combination of brownfield, a relatively quick time to going into production again, and being a critical mineral that is a dual-use one, is I think quite compelling. Of course, it's early stage, it's risky, so we're talking about to some extent a speculative investment. But if I had to speculate, I would definitely go with this one.
Thank you. Mark.
Good. Well, I think I agree with a lot of what people said. Bootstrapping's not a good thing, but sometimes you maybe have to do it. I think great business case for salt, but I'm actually going to split my money here. We're allowed to split our money between two, aren't we?
It's your money.
Because so half of it's going to go to Tungsten, American Tungsten, because of all the reasons that you just said. Okay, it's relatively low market cap. They're pretty much funded to get there. I think seems like a good business case, particularly in the particular geopolitical environment that we're in right now. But I'll give the other half of my money to Blue Lagoon, Is that going to get the name right? Blue Lagoon, like
Yes.
the movie with Shields and all that, what we're talking about? Is that why you called it that name? I don't know. So you'd remember it. Yeah. So the other half, and the reason for that isn't because you're going to produce 15 to 25,000 ounces. You know, I think that's a bit of a distraction, but actually, at least you're going to take all of that money, put it back in the ground to try and find the big one. And I think in terms of the geology of where you are, at least you have a chance of maybe finding that big one.
Thank you. David.
I thought very good presentations and quite a difficult choice actually between the four. I have some sympathy for Rick's opinion on sort of small-scale startup projects becoming a distraction. How many times have you seen the story? We'll get this mine into production on a small scale. We won't dilute shareholders again. It just happens a lot, and things don't go as well as planned often. Having said that, both the gold projects I thought were potentially interesting from a bigger scale perspective. So I probably would pass over those two. I thought, obviously, presenter said it himself, tungsten is a big thematic. The market's very strong for tungsten, and it's a critical mineral, etc. And a lot of people are very bullish about the commodity, so I can see that. Not easy projects to develop. It's quite concentrated industry. So sort of tempted by that, and I'm again without want to copy you, Rick. I'm like you. I think bulk commodities, a bit like the salt, are probably better served in private companies. Reminds me a lot of some of the bulks like phosphate, which you can come up with a compelling sort of case that you'll displace existing production. In practice, hard to do that, so that would be my concern about it, but I did think that the economics of it looked very interesting, and if there was a way to do it on a sort of smaller scale to start with, I think that probably would just about be my choice. I think the salt. Okay, so I'm hearing from you that Atlas Salt will be your choice, as long as they stay private. Or go private. All right, well, it looks like we have a clear winner then. Each of the presenters had to go through other rounds of doing these pitches. If you want to get up here and see what you can do in 3 minutes, it's extremely challenging. And of course, there's all the technology behind it that makes it even more frustrating sometimes. All four of you did an absolutely amazing job of working through your presentations and to get to this point in the rounds. So please give a warm hand to Nolan Peterson, Atlas Salt. Congratulations. And that's for you to hold, not for me.
Okay.
And I think that all that leaves me to do is to go and thank our judges. I think they did an absolutely excellent job. A round of applause for our judges.
Thank you.
Can we also please give a round of applause for our excellent Emcee, Alvaro, as well. Thank you to you all for coming. For those that are coming to the gala dinner, look forward to seeing you in a couple of hours' time. For those of you that are going home, I wish you all a safe journey home. We still have a few more drinks, some wine and beer over there, and look forward to seeing you in 2026. Thank you very much.